Now that we're past April the 6th, 2024, the pension lifetime allowance is well and truly gone, at least for now. Except that its legacy lives on in some new rules around tax-free cash, and we need to try and understand them, especially if you're likely to be affected. Hi and welcome back to the channel. My name is Pete Matthew and I'm a 26-year veteran chartered financial planner based here in the UK. I've helped thousands of families retire well, and I've been making videos like this one for 14 years. This video is brought to you by Meaningful Academy Retirement Planning. More on that in just a little bit. Now, the lifetime allowance, it was starting to affect more and more people. It had been reduced over several years so that many more people fell under its limits and would pay a tax charge when they came to take benefits from their pension. Now though, its shadow still looms with new rules around how much tax-free cash you can take from your pension. So if you're about to take benefits, or maybe you already have, but you've got more pots that you can access, you got to understand these rules. Fair warning, we're in the deep end of the pool here. This is complicated stuff and there are lots of new shiny acronyms to get to know. So I'm going to cover the headlines and the main things that you need to know and do, but there's just no way I can cover it all without sending you to sleep. Before we get into it though, I did two videos back when the removal of the lifetime allowance was first announced, and that might give you some context, so I'll link to those in the description below. So what are these new rules? Well, there's a new lump sum allowance for tax-free cash from pensions. That's our first acronym, the LSA. That allowance caps tax-free cash at £268,275. That's 25% of what the lifetime allowance was before it was abolished. So if you've got transitional protections against the old lifetime allowance, then your personal lump sum allowance could be higher. Tax-free cash is generally capped at 25% of the value of the benefits being crystallized. That much hasn't changed. But now it is subject to you having enough lump sum allowance available. In some cases though, tax-free cash can be higher or lower than 25%. And if you've taken benefits before the 6th of April 2024, your lump sum allowance will usually be reduced. But there's a choice of calculations you can use if you can evidence exactly how much tax-free cash you've received in the past. And in some cases, that actually might mean a higher available lump sum allowance. Now, this is important. If you would normally be entitled to tax-free cash from a scheme, but you don't have enough lump sum allowance available, then you can still be paid a lump sum, but it won't all be tax-free. Anything over the new lump sum allowance is going to be taxable. And this excess is called the Pension Commencement Excess Lump Sum, or PCELS. PCELS? As well as a lump sum allowance, there's a new lump sum and death benefit allowance, or LSDBA, and that includes serious ill health payments, maybe some lump sum death benefits paid on death before age 75. Not going to cover that in much detail today. So, this new lump sum allowance, like I said, it's £268,275. That's the maximum amount. Now, if you have a transitional protection certificate for your pension, such as fixed or individual protection, your old lifetime allowance was set higher. And so your lump sum allowance will essentially be 25% of the amount of your protection. So if you've got fixed protection 2012, say, when the lifetime allowance was 1.8 million, then your lump sum allowance will be 25% of that figure, or 450 grand. Now, if you've got enhanced or primary protection, that's going back to sort of 2006, well, the figures will depend on whether you had registered tax-free cash or not. Now, when you take tax-free cash, this is now called a relevant benefit crystallization event, or an RBCE. I think that's 4 new acronyms now. So this includes normal pension commencement lump sum payments and also the tax-free element of an UF+ payment. If you're in a defined benefit scheme, then you may have a declared amount of lump sum benefit, or you might have to give up or commute income in return for that lump sum. But however your pension scheme calculates the cash, if it is over the lump sum allowance, you are going to pay income tax at your marginal rate on the excess. But what if you've already taken some benefits before the 6th of April 2024? Before we get into that, if this is useful so far, please click the like button and subscribe to the channel if you're not already. It really helps, so thank you. So if you have taken some benefits before the 6th of April 2024, there are 2 calculations that you're going to need to consider. The first is the standard calculation, and that will simply deduct 25% of the lifetime allowance that you have used in the past from the new lump sum allowance. So here's an example. Tina crystallized 500 grand of her SIP back in 2015-16. And back then, the lifetime allowance was 1.25 million. So in order to work out how much lump sum allowance she has left, we need to deduct 25% of the lifetime allowance she's already used from the lump sum allowance. So her £500,000 crystallization used 40% of the then lifetime allowance. So the sum is 0.25, that's the 25%, of 0.4, that's the 40%, of the lifetime allowance when it was abolished, 1.0731 million. Well, that sum equals 107,310. We take that off the new lump sum allowance of 268,275, and you get a remaining lump sum allowance of 160,965, which is available to Tina. But you might benefit from using an alternative calculation, and doing so might mean that you get a higher remaining lump sum allowance. This is important if, for example, you opted not to take a lump sum from a pension. So perhaps you chose not to commute a DB scheme pension into cash because the commutation rates weren't favorable. Perhaps you had a personal pension with a really good guaranteed annuity rate, so you chose not to take any cash from that in order to maximize the income. Or maybe you transferred a UK pension into a QROPS, an overseas pension. That would have used up lifetime allowance when you did that transfer, but there would have been no cash payable to you. Or maybe you're just past age 75 and you've had uncrystallized pension funds tested against the lifetime allowance at age 75 under the old rules. But now you want to consider taking some cash out. If you can evidence the exact amounts of tax-free cash you have received in the past or not received, then you can apply for something called a Transitional Tax-Free Amount Certificate, or TTAFC, and that will confirm the amount, if anything, that should be deducted from your lump sum allowance. So here's an example of the difference that it could make. So John used 80% of the lifetime allowance in 2021-22 by taking benefits from his DB scheme. He took no cash because the commutation rates weren't favorable. He's also got a SIP with £500,000 in it. Now, under the standard calculation, John's remaining lump sum allowance is 0.25 multiplied by the 0.8 of the lifetime allowance he's already used, multiplied by the 1.0731 million, which gives him a remaining lump sum allowance of £53,655. But if John successfully applies for a transitional tax-free amount certificate, then as he took no cash from the DB scheme, he has the full lump sum allowance available to him. His SIP is £500,000, so he can take the tax-free cash of 25% of that. That's 125 grand. But that would mean he still has an unused lump sum allowance of 268,275 minus the 125 grand tax-free cash from his SIP. So that leaves 143,275 still remaining. Now, if you're going to apply for a transitional tax-free amount certificate, you must do this before your first relevant benefit crystallization event after the 6th of April 2024. Now, before I summarize what you need to remember here, the main points, check out Meaningful Academy Retirement Planning. It's my course which is designed to help you plan and execute the perfect retirement. To help you with that, included in the one-off cost of the course is a year's access to the incredible Voyant Go financial planning app. This professional level software helps you optimize for things like pension withdrawal strategies, tax planning and estate planning, as well as giving you some idea of how much you can safely spend in retirement. There are a ton of videos in the Academy to show you how to use it, and a thriving community of users all looking to help each other out. So check it out at meaningfulacademy.com/retirement planning. And if you decide that it's for you, use the coupon code YouTube for a discount. Right, there is definitely more to all this than I've been able to cover here, but here's the highlights in essence. The new lump sum allowance simply states that if you have a cash lump sum entitlement that is higher than the 268,275 figure, you're going to pay income tax on the excess. Your pension provider might not warn you about this. Some of them are still updating their systems, so be wary. If you've got transitional protection, your lump sum allowance could well be higher. If you've already taken benefits before the 6th of April 2024, you have a choice as to how your remaining lump sum allowance is calculated. But if you opt for a transitional certificate, you've got to apply for it before you take money out of a pension for the first time after the 6th of April 2024. So tread carefully. Also, we've welcomed LSA, PCELS, LSDBA, RBCE and TTFAC to the roster of acronyms in the pension world, FFS. So I got to say that if ever there was a time to seek professional advice, it's on this subject. This is obviously complex stuff. I've covered about a fifth of what you might actually have to undergo to get this right. And obviously it can harm your financial situation if you get it wrong. That said, please leave any questions in the comments. I'll do my best to answer them. In the next video, I'm going to address people's concerns about the lifetime allowance potentially being reintroduced when we get a Labour government. So subscribe to the channel to make sure you see that video, like this one, and thank you so much for watching. I'll see you next time.